Welcome back. I'm Pratap here. Today is 18th March 2024. In this video, let us evaluate the performance of high liquidity zones generated in the previous report. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are available in a playlist supply demand zone price action course at our NeoStock YouTube channel. I'm also providing the link to this playlist in this YouTube video description. If you click the link, you will get into this page. Then scroll down to the bottom, and here starting from lesson 1.1, all the training videos are available in an order. So please make use of this opportunity and strengthen your skills. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new YouTube video, we will provide an update in that channel. Now let's get into the analysis discussion. So today one stock we got the entry, that is NTPC, and one more stock also we got the entry, that is IRCTC, but we didn't take the trade because it is not having good RR, even though it reached the target, but RR is not good enough to accept the trade. That we will discuss. Apart from that, few zones are violated and we know they will be violated. We will discuss those scenarios also. So the first one is NTPC. NTPC is a 75 minutes high liquidity zone, and inside this 75 minutes we fine tuned with 15 minutes time frame. So here we have a rally base drop and we have follow through candles. But this is a very interesting trade, and moreover, those people who wants to learn the concepts more depth, this is a very good example. So please concentrate. So this is a aggressive trade. Inside 75 minutes we have 15 minutes. Now look into the inside 15 minutes. That is 5 minutes. See the 5 minutes zone? You have a drop candle, you have another drop candle, you have another drop. So here you can't find any real order flow here. If you look into one angle, that is true. You didn't find any order flow. Immediately what you do, you reject the trade. But do deep analysis. Let me tell you what points really attracted me in this stock. To look more deep into that, I will tell you. Next time you also start thinking in this direction, definitely your experience levels will increase. The first point that is attracted is the rejection here. See the rejection. The wicks are always gives some important price action clues. This is what you have to understand. See the wick here. This is a rejection. If there is a rejection, definitely it indicates some strong order flow is there. And from where this rejection is coming? From 15 minutes high liquidity zone. 15 minutes fine-tuned zone. High liquidity is 75. The 15 minutes fine-tuned zone, there is a rejection. That means in this area, there is a strong order flow. This is one point. This is the first point that attracted me. So that I want to analyze more deep in this stock. Otherwise, we would have easily said this zone is not having proper price structure in 5 minutes. Easily it will be violated. We can tell. But before that, some points that is really attracting us, that is what we need to focus. So this is the one. So I am sensing there is some order flow. And the second point, if there is any lower time frame zone near to this rejection, definitely we can plan aggressive trade. Previously, I explained you several times what is an aggressive trade. if you bypass one zone, which zone we bypassed? 5-minute zones, because we don't have 5 minutes. And then directly we are going to the next level time frame, that is 1 minute level. That is an aggressive trade. It need not be 1 minute, even 5 minutes. We took several 5 minutes aggressive trades. We bypassed the 15-minute zone. Inside daily we have 75 minutes. Inside 75 minutes, we don't have 15 minutes, but we directly went to 5 minutes and took the trade. Aggressive trade. But those aggressive trades should be supported by price action clues. Here the price action clue is rejection. And not only this, even there is another point also I would like to tell you. I don't know how many of you listened one of my earlier videos. I told you there is a special way of identifying the zones. Actually, we are identifying supply and demand zones based on the concept institutional imbalances. But there is another way also. People identify zones, demand and supply zones. They don't use institutional imbalances. Instead, they will use 2 leg candles, wicks they will use. Once I explained you this. See, this is a leg candle. This is also a leg candle. If you treat, this is also a leg candle. This is a medium size. This is a little large size. See the wick of this leg candle and the wick. Time being, let me delete this. Now you get clarity. So we have a leg candle. It is having a wick. We have another leg candle. We have a wick. This is a lower wick and this is a higher wick. Between the wicks, you can draw a zone. Because prices are going down. So they will consider this as a zone. There is another concept, supply demand zone concept. Between wicks of 2 leg candles, they will draw the zone. And from this area, the rejection is coming. See here? That's why it is attracted me. But we don't directly trade like this. I already told you earlier when I explained about this concept. When you draw the zones like this, you cannot take a trade. You have to identify zones according to our demand and supply zones point of view. But what I told you is, generally when you draw a zone, one time frame lower, mostly you will identify a zone according to our concept. What is our concept? Institutional imbalances. That is what we discussed in our lesson 2. So that means people are drawing in the 5 minutes time frame, but actually we identify the zone in 1 minute time frame. So let me go to the 1 minute. So 1 minute we will adjust this zone. Slightly the zone might be adjusted according to our concept. See, according to those people's concept, this zone is pierced slightly, maybe within stop buffer. But according to our concept, this is not pierced. See, we will see our base candles. Here we have our base candle. See here, this is how we draw. We have a rally, 2 base candles and a drop candle. See the move. After that, prices gave some price action clue. Came down, went up, gave a clue here and then went down. And this clue is attracted me in 5 minutes time frame. That is the first point. Second point, I have seen a wicks between 2 leg candles. Generally, when you have wicks between 2 leg candles, those zones work very well. I'm not saying always, but majority of the scenarios, those kind of zones are having strong order flow in the lower time frames. So this is the reason why. So I am taking the price action clue rejection, and also I am taking this zone within our high liquidity fine-tuned area, that is 15 minutes. The only one zone we bypassed is 5 minutes. So this is not exactly fine-tuned 1 minute zone. We just bypassed the 5 minutes area and then we fine-tuned this zone. That's why we are calling this as an aggressive trade. Aggressive trades should be traded only if they are supported by some price action clues. Otherwise, you cannot take aggressive trade. Here we have a price action clue. What is that price action clue? Rejection. Price action clue, rejection. So that is the reason why we have some interest on this. Not only that, it gave one more clue today just before we take the trade. If you look into today's, see here, once again prices entered. See, came down again. This is another rejection, strong rejection. A rejection came down. And then again there is another push. Now this time prices entered into exactly the area where we planned our trade. So this is the place, such kind of trades you should not miss. The reasons, let me tell you the reasons. One is we already have strong price action clue, indicates there is a strong order flow. The second reason why we should not miss, the risk is very small. When you have strong supporting reasons and risk is very small, why do you want to lose the trade? If at all, in case if our analysis failed, the kind of amount we lose is very, very small. So that is the reason why such kind of trades are a very high priority we have to give. We should not miss them. After that, see the rejection, how it came down, and finally it reached the target, and our trade is finished in just 14 minutes. So round value we can say 15 minutes we finished the trade. In 15 minutes, you know how much profit it has given? You will surprise. It has given 20,550 rupees profit, which is 12.2% ROI as per one futures margin cost. That means you got 12% return for your investment in just 15 minutes. So who is the reason for all these things? The price action clues which helped us. Moreover, we didn't limit ourselves to just 5 minutes time frame. Because price action clue is there, we digged into one more time frame below. That is 1 minute, and there we have seen a strong order flow. And moreover, another concept that helped us is drawing the zones between the wicks of two leg candles. One leg candle lower wick and another leg candle higher wick. Between them you can draw a supply zone. If you draw a supply zone mostly in the lower time frame, mostly means at least 99% scenarios, in the lower time frame you will find a excellent zone as per our supply demand zone concepts, that is as per institutional imbalance concepts. That is what we have seen, and finally we took a trade here and it gave an excellent return. And thereafter the price is moving within this entire day, the rest of the day, but we finished our trade in just 15 minutes. That's it. Whatever we want, we achieved. Finding such kind of trades is very, very important. Such kind of skill everybody has to develop. That is what I am trying to say. So this is about, previously also we took couple of such kind of trades even earlier. This is not a new trade for us. Maybe some 1 or 1.5 months back, people who attended these high liquidity zones concepts, they are aware of this concept. So this is about NTPC trade. And the next one is IRCTC. This is a 75-minute zone. We have a drop, 3 base candles and a drop. And we have fine-tuned this 75-minute zone with 15 minutes time frame. We have a drop, base, drop. This 15 minutes time frame, again we have to fine tune with 5 minutes. This is your 5 minutes candle. This is the way you have to mark your candle. This 5 minutes is there inside 15 minutes, but the thing is risk is very high. So finally reached and came down. But see the reward is very small. You can't. So for that what you can do, instead of your type 2, you can also plan type 3 in case prices enter. Previously I told you several times, if the risk is very high, you can plan type 3. Provide prices should enter into that, you will be lucky when you go for type 3. So today that is what happened. It reached type 3. So now reward has been improved. Even though reward is improved, still it is not good enough to take a trade. Because we are looking for 15 minutes targets. Look into the 15 minutes target. We have a rally, 3 base candles and a rally. And follow through candles. Finally reached. And after that, prices slowly came into this. Maybe during closing hours it reached. But still we didn't take trade. The reason is the RR is only 1:2. I told you previous, if you are an experienced person, 1:2.5 is also okay. But if you are having a less experience, don't go below 1:3 trade. And if you are a beginner, always you look for 1:5 trades. These points you should remember. But I seen some people also trade based on 1:2 trades also. But I am not comfortable with it. I don't prefer 1:2. For me, the limit is 1:2.5. This is only 1:2 RR. So that's why we didn't plan any trade. But it reached the target. It entered, type 3 entry it took. Finally, at the end of the closing hours, it reached. There is a reason many people would have avoided this stock because it is not having good RR. That could be another reason. Okay, this is how IRCTC, even though it reached the target, but we didn't take the trade. Now let's look into the remaining stocks. AU Bank. AU Bank is a daily high liquidity zone. Already I explained how to fine tune AU Bank in one of our earlier videos. So I don't want to waste our time not getting into this. At present, AU Bank is between moving 2 high liquidity zones. One is a 75 minutes and another one is daily. So between them it is moving. Yesterday the stock was near to the supply zone. This is the way it listed, but prices did not enter. Even this demand zone also, the fine-tuned area it did not enter. Moreover, fine-tuned area is already, prices went deep inside. So because of all these reasons, anyway, we didn't get a trade today. So we can ignore this stock. And next one is Idea. Idea also we discussed, and I told you don't get into this stock because this 5 minutes and all is not at all clear, even though it didn't come. Still also it is near to the zone. I think our software may list this stock again today's report also. So 5 minute zone is not comfortable. That is what I explained in a couple of days back. I'm not sure further explaining because we already discussed. So it's a waste of time again focusing on this. And Apollo Tires, very interesting. See, today it is violated. But we know this zone will be violated. The reason is we already fine-tuned this. This is a drop-based rally. This is a 75-minute zone. It's not a daily zone. It is a 75-minute zone. Inside 75 minutes, we fine-tuned with 15. First, let us look into that. This is a fine-tuned with 15-minute zone. But the only thing is, the problem is, the structures are not good. This is one point you have to understand. But compromised and run at that time, so that we can find some order flows at the lower time frame. But they worked. It gave a test earlier. So that is good enough. See here we have a leg candle, 2 base candles and a rally, and a drop candle and 2 base candles. It already picked up the orders from this zone. See this zone? So you can't consider this zone again for trading because it is already tested. So let me delete this zone because it is tested. But still inside this 15-minute zone, we have drop, base, rally, and again prices entered into this, picked up the orders. So again it is doubtful whether to take a trade or not. And next, once again, it picked up the orders from this zone. But it is not, there is a strong order flow was there earlier. That is a good indication, but it already tested 2 times. But it is not a high liquidity zone. So giving priority to this zone is really quite risky. See today what happened, easily the zone is violated. But there was some rejections here from below. Okay. So this is one violated zone. Next one is Z limited. This is also a 75 minutes zone. And this zone we didn't plan any trade at all. The reason is this zone is a 2020 zone. Year 2020. This was the one. And why we didn't plan? We didn't have the data to fine tune for 15 minutes as well as 5 minutes. 15 minutes data is also not there in trading view. So that's why waste of time focusing on this stock when you don't have the data. Anyway, prices also did not enter today. But it might be listed, maybe today also it may list our software because prices are near to the zone. Let us check, our software may consider, because volatility conditions, everything supporting to select this stock. Okay. Even if our software lists tomorrow, you need not bother about this stock. Next one is Axis Bank. This is a 75 minutes high liquidity supply zone. See, this zone is violated. The reason is we fine-tuned up to 15 minutes. 5 minutes I couldn't fine-tune. Why? I will show you. Maybe you also might have seen this. So this is a drop-based drop. If you look into 15 minutes time frame, maybe this is a leg candle, medium size. You can consider this as a base, small candle, and definitely this is a drop candle with hidden body. Go to the 5 minutes. What is it you have? This is looking like a demand zone. And moreover, okay, if you consider one of these candles as a leg candles, you have 3 base candles and a rally candle. After that, you have a drop candle, and this demand zone is already violated. But 15 minutes it is showing as a supply zone, but when you look into 5 minutes, it becomes a demand zone. What will happen to such kind of zones? They will be violated easily. But one thing is, interesting thing is, some resistance it has given for about 20 minutes or maybe from 9 o'clock 25 minutes to 12 o'clock. It has given a good resistance. Generally it should violate easily. But anyway, we didn't plan a trade because of this is going to be violated. Somebody would have planned a trade, it might have reached, yes, a drop base, a draw, rally. This is the target, it reached price. But you can't take a trade. There is no 5 minute zone, and moreover, the risk is also very high here. RR is not there. 15 minutes supply zone to demand zone. Why I am talking about this is because some price action happened, just to check what is really happening here. But anyway, we can't plan a trade such kind of zones. We need a demand zone inside this zone. We need a supply zone inside the zone, but we found a demand zone inside the supply zone. So finally the zone is violated. So this is about Axis Bank, and next one is Coforge. This is also a 75-minute zone. This is the one we fine-tuned, but prices did not enter. And this zone is already tested, but still there is one more order flow created, so that's why I just drawn to check whether to accept the trade or not. I'll show you. So inside this 75, we identified two 15-minute zones. This is the one drop, 1, 2, 3, 4, 5 base candles and a drop candle. This is a 15-minute zone. And we have one more 15-minute zone. We have a leg candle, 3 base candles and a drop candle. See, prices entered into this zone. They've entered more deep inside. This is according to the 15 minutes time frame. But look into the 5 minutes time frame. Five minutes already we have a rally based drop. See, previously already it gave one test. This is the second test. But in this second test, again rally base, prices came down. But the drop candle I couldn't convince in this structure. Maybe if I can consider this as a compromised drop candle, but already prices, this entire zone it is occupying. Maybe this is a valid candle. Even if you want to consider this, you have a rally 1, 2, 3, 4, 5 base candles, fine, this is valid. But see how much width of this zone, 5-minute zone. You can't plan trade when the width is so much. There should be some limit to consider the width. So your risk will increase. So by considering all these factors, I am doubtful next time whether to consider this zone or not. Even if I want to consider this as a leg out by compromise, I am not in a position to convince. Even for compromise also I am not able to convince. So that is the reason why I am doubtful about this trade. Better to avoid this. Don't get tempted. This is not good structure. If at all if you want to plan, maybe next time you can plan this. You have a rally candle, 2 base candles and a drop candle. The structure is good. Rally, 2 base candles and drop. And we have type 2 proximal we have already drawn. So here you can plan a trade next time within this 15 minutes. But next time in software should show this stock. Otherwise, you cannot get into these zones. Without software is listing, the prices are going there. If you take it may fail. The zone may fail. Many times you will experience that. Because volatility conditions are very, very important. Software is focusing on them. So anyway, we didn't get a trade. Coforge, IRCT we discussed, and Kodak Bank. This is again a 75 minutes supply zone. Actually, below this there is a daily high liquidity zone is there. See, Kotak Bank many times it is picking the orders from here. Any swing traders, probably this is a very good stock. High liquidity. This is a high liquidity zone. Last time when it came, 14th March it came. See the return how much it has given. From 1650 rupees, it has given, the move is up to 2000. So it's a very good move. Okay, for us it is a supply zone, high liquidity supply zone. So we have a 75 minute zone. Inside 75 minutes we have a 15 minutes zone. We have a drop, 4 base candles and a drop. And inside that 15 minutes we have drawn the 5 minute zone. Have a leg candle, 2 base candles and a drop candle. This is considered as a ERC candle. So previously prices entered and it is within the stop loss buffer limit area and then it came. But now you cannot plan any trade because this is already pierced. Your trade would have saved earlier. That is a different story. But this zone is no more valid to plan a trade. The reason why I am showing you what is really happened here, why we can't take a trade in this zone. So Kodak Bank you cannot plan, and NMDC, this is also a 75 minutes high liquidity supply zone. Previously already NMDC came and it gave an entry and it gave a very good return during, I think NMDC, have we taken a trade previously? NMDC. No, right? Software was not listed. When it was, that is on Friday itself. I think Friday it is not listed in our, anyway. This is the fine-tuned earlier. So exactly it reached the fine-tuned area, just a little, maybe 0.5 paisa, 5 paisa or 10 paisa. Below it came and rejection and gave a very good move. This is the one we fine-tuned earlier, NMDC. But maybe software didn't list. Otherwise Friday we would have got a trade here, successful trade. It would have been. And okay, fine. Let us focus on the supply zone. Why we didn't plan? We know this zone is violated. I didn't draw even 15-minute zone inside. That means 15 minutes structure itself is not good. See the 15 minutes. We have a drop. 1, 2, 3, 4, 5, 6, 7, 8 base candles. First of all, this is not a base candle. ERC. You can consider as a leg candle. This is a leg out. In between, no base candles. So that's why this zone is should be violated easily. That is what happened. Still last hour, maybe just narrowly missed. It came down. Otherwise, this zone would have been violated today. Anyway, we didn't plan any trade in this stock. Because this zone is not violated, if institutions decide to create a new 15-minute zones and 5-minute zones inside and further push, next time we will get an opportunity. But definitely not now. So the next one is the NTPC we discussed, and Page Industries. This is also violated, we know. This zone will be violated. And this is another typical scenario. Why a zone is violated? You should have some better experience to understand. Let me show you. We have a drop, base candles and drop candle. But if you look into 15 minutes, the structure, 15-minute structure is good. We have a leg candle, 2 base candles and drop candle. But look into 5 minutes. See the candles. Maybe you may consider this as a leg candle, or otherwise this is a valid leg candle. These are all small candles. 1, 2, 3, 4 candles. But a drop candle is not a considerable candle. Even if you want to compromise and draw, the follow-through candle is again a tinny candle. All these tinny candles are base candles. That's why the 5-minute structure is not at all convincing here. And that is one point. See here, the price movement here, consolidation, price action, rejection should happen, right? It didn't happen before. Prices stayed there only. They didn't reach up to this zone. Maybe that day the demand and supply, they were fighting between institutions and all these candles. But here order flow should be strong, right? If order flow is not strong and it is allowing the buyers to hold the prices inside the supply zone, what it indicates? It indicates a lot of consolidation activity. And also it indicates this zone is not having really much power. See today what happened? Just in one candle morning, 9:15 candle, prices went up, immediately they came. Everything happened in 1 minute. Exactly 9:15 candle, this is what happened. That means no order flow at all in this zone. That's why you should be very careful. First I thought I want to compromise and draw a 5-minute zone, but for compromise also it didn't allow me. Because next to the candles, all these candles, see here, there should be a big push should be there. At least one leg out candle, and then came up and then come down and going down. We should consider. Such kind of things happened. Did not happen after this zone. Anyway, leg out is not at all a good leg out to consider. This is a medium size candle. So if you want to compromise for medium size candle, there should be another good leg out, one more leg candle should be there. Follow through candle should be good candle, not a base candle. Or worst case, even base candle, at least after base candle, one more good follow through candle should be there and push it down. Prices didn't go out of this zone. They stayed within this zone. So such kind of zones are mostly they are bad zones. They violate easily. See how it happened in just 1 minute candle. 1 minute candle it happened. No orders at all in this zone. Otherwise it would have stopped here. And this rejection came because maybe above there is one more zone, some zone somewhere here. That could be the reason it came. Okay. So this is about high liquidity zones generated in our previous report. Hope this information will be helpful to you, especially the first stock we discussed. NTPC is a very good learning for most of you people. Because such kind of experience I want everybody should get. See, such kind of examples you get once in a while. You won't get every day. Every day if you are seeing such kind of examples, all those points will get into your mind. Rarely you get an example. When you get such kind of rare examples, you have to concentrate and then you have to spend some time to understand those scenarios. And next time in future again, you will not get immediately. After some time you will get. At the time, your mind should remember these concepts. Important concepts, always you should keep on memorizing in your memory. Otherwise, what happens? It's not easy for us to remember everything in our mind. But the day comes, you miss the trade if you forgot that concept. Okay? So let's all meet again in our next video. Thank you.